This is probably gonna be the last video that you're gonna see me explaining this strategy to you. And there are a few reasons why, but the main one is because I've made so many videos talking about this in the past that it's always like, I don't know, it's starting to look like I'm repeating the same video over and over. Nevertheless, in this video, I'm not just gonna explain you the strategy and share some live trades or whatever. No, I'm gonna get you step by step, holding your hand, explaining every single detail in regards to this specific strategy. And you can tell by the length of this video, because it's gonna be longer than usual, that I'm actually putting a lot of effort on it because I want to make this like the best Netflix movie that you're gonna see. This entire video is gonna be a movie about how you can start making money with binary options using this specific strategy. So if you're interested in learning like how to make money online and you wanna start making money even today, tomorrow, $100 a day, $300, $500, $1,000 a day, then this is the video that you need. Hey everyone, Christian here on YouTube. Welcome to a brand new video for the channel. Today, I'm gonna teach you the best binary option strategy for 2025. I'm releasing this video at the beginning of the year because I know you're not gonna need any other strategy in the future. So make sure that you actually grab some popcorn, grab a snack, cup of coffee, whatever that is gonna keep you awake and paying attention, because this video, and also you should save it into your favorites and stuff so that you're gonna rewatch it as many times as you can or as you need, because after watching this video, there are no excuses as to why you're not making money with binary options. If you're new to my channel and you're into binary, forex, crypto, or any type of making money online, hit that subscribe button below, smash the like button as usual to support this YouTube channel, and make sure that you actually share it with anyone that can actually use this information in order to make money. Brother, sister, girlfriend, wife, father, grandfather, it doesn't matter. Share it with the world because everybody will get this free information and it's gonna help them out. So without further ado, let's begin. Now, I want to start this video by talking about what's the best broker for this specific strategy. And if you actually think that this is unrelated to the strategy itself, you have no clue about day trading. Because look, if you choose the wrong broker, many things could happen, but I'll give you 3 examples. Number 1, you might not be able to find the settings, meaning the indicators that I'm going to explain you in this video. Number 2, you might find, yes, the indicators, but you might not find the tools that you need, such as expiration time and so on. 3, you might actually find the expiration time and the indicators, but you might find low payouts in the pairs. There are some brokers out there that, I don't know, they got used to giving like 24% payout on trades and stuff like that, which is absolutely insane. Right? And one more thing, this is like a bonus issue that you might be able to find, you won't be able to withdraw because there are very few trusted brokers out there. Well, not very few, but I mean, the best one is Pocket Option. Bottom line, fast withdrawals. As a matter of fact, like 2 months ago, I was able to withdraw over $200,000 and no issue at all. If you actually want to be on the safe side and you want to use one broker that I consider to be trusted, just my opinion, there's going to be a link in the description of this video for you to check it out. Pocket Option is available worldwide and they have crypto deposits and withdrawals, which makes it super simple for you to actually, take advantage of the strategy itself and get the maximum out of it. If by any chance you are offered a bonus, I want to make sure that you understand that yes, they can give you a 150% bonus, which means you deposit $1,000, you get $500 or up to $1,000 in return as a bonification, but they do have some restrictions when it comes to withdrawal afterwards. So my biggest advice is, I'm not saying don't take it, all I'm saying is just try to go through the terms and conditions so that at the moment that you decide to actually take it, you are fully aware of what's going on with it. So like I said, I'm gonna have the link to Pocket Option below in the description of this video, the broker that I've been using since 2018. The first topic that I want to talk about this strategy for, and I don't need a computer to teach you this, is trending. Look, trending in day trading itself is a key point from not making any money to becoming a full-time day trader that can quit their job, that they can travel around the world and so on. Trend is your friend. That's a saying within traders. Basically what a trend is the direction of the asset that you're trading with is actually going to. Let me give you an example. When Bitcoin is on bullish, what is called, or when Bitcoin price is actually going up, it's called an uptrend or uptrend. And whenever there's a crash on the market of Bitcoin and Bitcoin starts to come down, that is considered a downtrend or downtrend. So when it comes to trends, specifically through global currencies, which is what I currently trade, which is euro against the US dollar against the Canadian dollar, US dollar against the Australian dollar, and so on. These type of assets actually have different moments during the day, during the week, from going to uptrend to downtrend and backwards. There's a huge difference between, for instance, stocks. When you see stocks, usually all you have to do is pretty much find out what the trend of the month is going to be, and unless something weird happens, the price continues to go into that trend. And when it comes to binary options, since we're trading with faster time frames, we do need to actually be aware that with small assets such as euro or currency itself, it's really complicated to actually determine one single trend for the entire week, for instance. You're gonna have to understand that their trends are constantly changing during the day. And especially for this specific strategy, since this is gonna be a 5-minute strategy, it's super normal that in the morning you see a downtrend, and at noon you're gonna see a uptrend, and during the afternoon you see a sideways trend, which means that there is no actual clear trend to follow. Now, when it comes to trends, the importance that you need to take in consideration with this strategy is that you are always going to trade with the trend, which means that if it's an uptrend because the price keeps on going up, then you're gonna trade call positions, high positions, buy positions, whatever you call it. But you're gonna actually start going up. And whenever there's a downtrend, you're gonna enter only put positions. You're never gonna go against the trend. We're not gonna place calls on downtrends. We're not gonna place puts on uptrends. And whenever there's a sideways trend, which means that there are no trends in the chart, which is when the price is just in the middle or whatever, I'm gonna give you some examples in the computer. You need to understand that you're not supposed to trade just because you have to trade. If you don't find a good opportunity to trade, you just don't trade at all, and that's it. The cool part in regards to this strategy, at least regarding this, is that you're gonna find a lot of opportunities during the day to trade. So it's not like you're just gonna spend one day without trading. But there are some occasions when you're gonna see the sideways trend, and you just need to avoid that specific asset or that specific pair and move on to the next one. One thing that I noticed that a lot of people make as mistake is going with trades that are not 100% clear as to what the trend is, and they simply want to trade because they are one trade away from their target, or they just I don't know, they force their trades. But no. So the important part on this specific point is that you are going to trade with the trend, never against the trend. Let me know in the comment section if this is actually clear. Smash the like button, and let's go to the computer for the next topic. We are going to go to the office, but first take a look at my baby. Say hi. Say hi to the camera. All right, she's quite shy. But let's get to the computer now, and we're gonna pretty much understand what I've been talking about in regards to trending and so on. Take a look at the session that I was able to have just today. This is just a show off, right? Take a look, all the wins. I was able to make around $6,100 or something like that today. I'm not 100% sure because I didn't keep track of everything. And I'm sorry about the lighting because that's actually getting in the middle, but take a look at the trades. And I did all of this using this specific strategy. So you want to learn it? All right, so let's go ahead and start with the basics here so that we can start getting into business. Look, you're gonna need a few indicators for this strategy to actually work out. But since we just talked about trending, I wanna give you the indicator that is actually gonna help you find out what trend we're talking about. First of all, when you open your pocket option account, this is exactly what you're gonna see. There's no like candlesticks, indicators, or anything whatsoever. So what you need to do first is actually go into this little icon right here, click on it, and select candles. In candles, there's something really, really important that you need to actually enable, which is the timer, enable timer. That way you get to see exactly how long the candlestick has an expiration to finish the round and start a new candlestick, right? Make sure you have disabled the auto scroll, because otherwise it's just gonna keep on changing the time frames and so on. And the grids, honestly, I always keep them active, but I don't really care. The time frame doesn't matter right now. What we care about is the candlesticks. We're gonna add the first indicator of the night, and that indicator is actually a moving average. So you're actually gonna click on this button right here, and you're gonna select moving average right here. It's just gonna be added automatically. Once you actually are ready, you need to actually click on this little pencil right here, and it's gonna display the settings of this specific moving average. I'm going to select the 50 moving average. Oh shoot, 50 moving average. It's gonna be an SMA. And if you want it to look exactly like mine, you can go to styles. You can select 2 pixels, that one color and 2 pixels. And that's exactly the way I do it. Okay, so just like, I don't even know what this is. It's just a display, and click on the save. This is the way I have it. Quite simple. Now, what is the moving average? For those of you who have no idea what it is, it seems just like a line that it's laying out there in the charts, but you probably never heard like what is in fact a moving average. Well, a moving average is an actual, as the name says, is an average price of the last 50 candles, or the last X number of candles, depending on the period that you actually select. So for instance, myself, I decided to choose a 50 moving average, which means that in this little pricing that you see right here, this line, this little tail that you see right here, it's the average price of the last 50 candles. Why is this so important to understand? Because whenever the moving average determines that there is a trend, there's a history of 50 trades behind that trend, so that it can actually like justify why we're talking about an actual trend. The longer, obviously, the longer the period of the moving average, the more confirmed is the trend. But honestly, if you use, let's say 100, 150, it's very unclear. Okay, so with 50, you have a pretty clear image as to what is the trend of the asset, especially in shorter time frames like the ones that we're using right now. Now, keep that in mind. The moving average will determine the trend of the asset. What do I mean by it? And this is an actual example, perfectly clear, of a downtrend. What happens is that in order for you to determine whether it's an uptrend or a downtrend, there are 3 things that need to be met. Number 1, the moving average is going into the direction or in the direction of the trend. So if you actually see this right here, it's going up. So this is not a downtrend, but right here is going down, right? So up and down. Criteria number 1. Criteria number 2 to determine an actual trend, candlesticks have to be, like they must be either above or below the moving average. If they're above the moving average, it is an uptrend. And if the candlesticks are below the moving average, it is a downtrend. As you can see right here, all of these candlesticks are below the actual moving average, except for here and here. Other than that, this is a clear downtrend, okay? Now, if we actually look right here, all of the candlesticks are above the moving average, which this is actually considered an uptrend. Look, you gotta rewatch this part as many times as needed in order for you to fully freaking understand what is an actual downtrend and what is an uptrend. I can be more clear than this, but yeah, rewatch it. Now that we have and understand what a down, and remember, we are always and only going to trade with the trend and against, never against the trend. So if it's a downtrend, it's put positions. If it's an uptrend, it's call positions. So hopefully that's actually clear. Now, I want to go and take a break now and watch a soccer game that is actually on right now in about 5 minutes. And then I'm gonna continue explaining the strategy. But take a look at the Philip Plain shoes that I was able to get over there in LA. It was in the Beverly Hills Mall. Shout out to the person that actually gave me all the information in regards to these shoes, because her customer service was just top, like top, and especially in Phillip Plain where their customer support is not even that good. But yeah, I just wanted to share with you the shoes. I also got this Kenzo sweater, which I don't know, for some reason it's like it shrinked or something. It's smaller than it used to before I actually put it into the washing machine. So probably I just ruined it. But yeah, let me know in the comments, what do you guys think about the shoes? What do you guys think about the sweater? Did I ruin the sweater? You let me know. And let's go back to the next part of the tutorial after the game. All right, so we're back with the tutorial. I know I'm wearing different clothes, but look, like I said, this tutorial has to take a lot of hours of, you know, explanation, training, and so on. But I'm actually recording this the next day. Let's go ahead and get to business. Now, I already explained to you what is the moving average and what is the function of it, right? It's actually time for me to teach you what is the RSI and the stochastic oscillator, which are the other two indicators that you have to have in your chart. So in order to get that, all you have to do is actually go into this little icon right here, click on it, and you're gonna add the RSI. Just click on top of it, and then you add the one below it, stochastic oscillator. Boom. You have these little arrows in order to make, you know, a little bit bigger. What is it that you need to do? You need to understand what is the stochastic oscillator. That's number one. The stochastic oscillator has different periods, and if you actually go into the pencil right here, you can change the period of the lines. You can change, let's say, to 25. You're gonna realize that it keeps on changing. You can go 100, and it's gonna change some more, and so on. We are gonna leave it as 14, because that's basically the one that we care about. The 3 and 3, also you can change it. You see that the blue line actually changes. You can do 15 and so on. The orange changes. We're gonna leave it at 3. And the smoothing period, if you actually change it, same thing happens. It continues to move. Now, you're gonna leave it as SMA. You don't need to understand exactly like every single digit or every single high frequency number that is on the chart. What you need to understand is what is it that it does in the actual settings. So the settings is 14, 3, and 3, that's for sure. What it does is actually very interesting. You're gonna realize that there are movements on stochastic, the blue line, and the orange line. You're gonna realize that the one that moves the most is the blue line. So the blue line is actually doing this on the orange line. It keeps on crossing it. So what we need to focus on this strategy specifically, is the crosses or the potential crosses on the blue line in the direction that is actually taken. So if it crosses up, it usually means that the price is gonna go up, and it crosses down, it usually means that the price is gonna cross down. How do you identify whether the price actually goes up or down? Let's take a look at this cross right here. Maybe you see the little dotted cross that is actually happening in the mouse right here whenever I move it. So I'm gonna put directly on the cross, and this is what happens. You see a red candle. It basically is because the stochastic is crossing down. You see it? Now, what happens on the opposite? Let me try to find one. Crossing up. Maybe this? Yeah, right here. You see the cross up? Maybe in the editing, I'm gonna close it up a little bit, but you can take a look at the candlestick, and the cross up is actually green. That basically means that the price went up. What the stochastic actually does is identifying where the price of the candlestick is gonna go, whether it's going to go up or whether it's gonna go down, okay? So it keeps on doing this all the freaking time. You can see right here is a cross. Right there, it's a red candle. It's a cross, is a green candle. It's a cross, is a green candle. It's a cross, is a red candle, and so on. This doesn't happen 100% of the times. I want to say that up front. It does not happen 100% of the times, but it happens very often. So that's what we take advantage of. Now, let's go ahead and talk about the RSI. The RSI is this little thing right here that you see. Now, RSI is a type. I'm gonna put it on the easiest possible way. The RSI is a support and resistance level, okay? Simple as that. What is a support and resistance level? For those of you who are not familiar, a support level is the lowest line that you're gonna see. Let me just go ahead and change it because I wanna make it, you know, more clear. This is the support level on this price right here, the lowest point of the price, and the resistance is the highest point. When we talk about support and resistance level, it's resistance is the highest point and support level, because it supports the price, is the lower level. What happens usually with the support and resistance is that the price will actually get to that level and then retract. I say usually because it also breaks, like it broke right here, and it continues going on that direction specifically. But for this specific strategy, what you need to understand is that the price actually reaches the level, the resistance, and then it pulls back down. It touches the support level and it pulls back up. That's support resistance level. The RSI, it's something very similar. It's like a support and resistance level on every day on the same asset. So as you can see right here, there is a support level. What happened? The prices started to jump. Hey, but there's a resistance level right here touched. What happens? The prices starts to drop, and so on and so forth. All day long, the RSI is gonna continue doing this, okay? Now, can you just trade by looking at the price touching and then, no, that's not the way it works. You can, you're gonna be slightly accurate, but that's not what the strategy is all about. But you need to understand what the RSI is. Why is that? Because you're gonna realize that there's a middle line with a level. The levels that you can see in this little part right here is 70, 50, and 30, right? 70 is the highest and 30 is the lowest. But there's a middle level, right? What does that middle level do? That middle level actually turns into a support or resistance level based on the trend that you have in the asset. What I mean by it is that if the price is a down trend, this 50 line becomes a resistance level. It means that when the price actually reaches, like it literally did right here, the price usually retracts. So it's a good position to actually enter for a put. If it's an uptrend, the 50 line becomes a support level. So when it touches, what happens is that the price usually starts jumping back up, okay? So it's some sort of changing support and resistance level, if you will. But the 50 level is the one that changes. I don't want to make this more complicated than what it already is, but I want you to really pay attention to this because it makes a whole difference. After watching this video, the point is that you're not asking like, hey, but what does this indicator do? You already know. So therefore, you can even manipulate the indicator as you wish in order for you to actually get even better results than the ones that I have. Does that make sense? Hey, before I continue with the tutorial, make sure you smash the like button if you're learning something new, and leave a comment, just spreading the word, saying what you think about the tutorial so far. Make sure you do that. And if you're not subscribed, you should be subscribed for more tutorials just like this one. Now, what happens with this strategy is that you need to find a combination of 3 criteria with the RSI and the stochastic. Okay, we already know that we're just gonna enter put positions on downtrend and call positions on uptrend. But when it comes to the criterias, in regards to this specific, the 2 indicators, RSI and stochastic, is the following. The stochastic has to be in a position where it can go into the direction that you want to. How can I explain it better? This is a downtrend. The stochastic, remember that the blue line is supposed to cross going down if we're gonna go with a put position. So if the stochastic line is below the orange line, like it literally is right here, it's impossible for us to enter a put position because it's actually saying that the price is gonna jump a little. So criteria number 1 for put positions, the blue line on the stochastic has to be above the orange line. Let me say that again. For put positions, the stochastic has to be above the orange line for us to enter a position. It doesn't have to be crossing, it has to be above, okay? For call positions, meaning an uptrend, the blue line has to be below the orange line. Let me say that again. For call positions, the blue line on the stochastic has to be below the orange line because it's actually getting ready to cross. It doesn't have to be crossing, it has to actually be below, okay? Criteria number 1. Criteria number 2 is that the pricing is slightly away from the 50 SMA. What do I mean by it? Is that if the price actually goes crossing this level, like it's touching the 50 simple moving average, it's too risky to enter because it could ended up jumping and I don't know, it's just gonna change the trending and you're gonna lose the trade. So it has to be like, there has to be like a little distance between. Like for instance, this one right here was a great entry. Why? Because you can see that the stochastic is actually ready to push down, like it's below the orange line, it's an uptrend, and it's slightly away from the 50 moving average. Same thing happened here. It's getting ready to cross, it's like below the orange line, it's slightly away from the SMA, okay? You need to be sure, because otherwise, if it's actually touching like it's literally doing right here, then like this was a great entry, but this one right here, no, especially because of the stochastic, but you see what I mean, right? It's touching the 50 SMA, so it gets risky. That's second criteria. The pricing or the candlesticks have to be slightly away from the 50 moving average. And the third criteria is that, and this is the most important one, is that the RSI 50 level is being reached. Look, if you're gonna be looking for an uptrend and you're gonna be putting call positions, then you're gonna realize that every time, or at 99.9% of the time, when there is an uptrend, like the moving average going up, the candlesticks are above the moving average, you're gonna realize that the RSI like moving average period, this one right here, is actually always moving above the 50 level, between the 50 and the 70. Like it's dancing around. Take a look, there's an uptrend and it keeps on going like this. Guess what? When it becomes a downtrend like it happened right here, the RSI is actually gonna be dancing between the 30 and the 50 level. What you need to be focused on is the moment when the 50 level is reached. If you're gonna be placing call positions and the price is right here, you need to wait for this moment when the 50 RSI reaches that level. And that's when you enter. We're gonna talk about expirations, candlesticks, and so on. But the moment that you're supposed to enter a trade is three criteria. One, stochastic is in a good position to cross. I'm not gonna explain that one more time. You can rewind the video. Two, the candlesticks are slightly away from the moving average. Three, the RSI 50 level is actually reached. As simple as that. This is why the RSI and the stochastic is so important. Rewind the video if you want to actually go again through the explanation. You can actually realize that I talk about going to 5 to 50 minutes, at least if you are slightly familiar with the strategy. But let me start from zero. This strategy is gonna be in 5-minute candlesticks, okay? 5-minute candlesticks. I'm not talking about expiration yet, just the candlesticks. 5-minute candlesticks is the main chart that you're gonna be looking at. But this is an extra criteria. You can apply it or not. If you don't apply it, you might draw your accuracy to like 75% or something like that. But if you apply it, you can increase it 85 to 90. The trend has to be the exact same trend on 50 minutes than it is in 5 minutes. What do I mean by it? Let me try to look for one opportunity because I haven't found one. All right, take a look at this one. You can see that if the price actually jumps a little bit more and touches the 50 RSI, then you can enter a put position, right? But let's take a look at the 50-minute chart. You see what I see? It's a sideways trend. It's not a downtrend. It might become a downtrend in a little bit, but it's not right now. Do we enter the trade? No, I don't recommend you to enter the trade. I recommend you to enter a trade when the 15 and the 5-minute candlesticks are going with the same trend. Let me look for another example, literally right now. All right, so this is an uptrend and it's literally reaching a level, a pretty good level actually, right here. Let's say that I put it there, I don't know. But that is a good entry level, yep. Let's take a look at the 15-minute candles. And guess what? Boom, it is an uptrend. Pretty good, right? No, because there's one more criteria when it comes to the 5 and 15-minute candlesticks. It is actually a very tricky one that a lot of us, as I include myself, I'm not 100% perfect. I'm not perfect at all. Sometimes I make the same mistake. And it is the stochastic has to be also in a position for the trend, which means if you're gonna go with a call, remember the blue line has to be below the orange line in 5 minutes, but it also has to be in the, not possibly the same, but it has to be in also a position for a call coming, which means that the blue line has to be also below the orange line. If it's gonna be a put, the blue line has to be above the orange line in both 5 and 15. And if it's gonna be a call, it has to be below the orange line for both 5 and 15 minutes. What happens in this trade is that, as you can see, the stochastic is actually crossing down or about to cross down on 15 minutes. On 5 minutes, it looks amazing, right? It reached the 50 level and it is in a great position to start crossing down. Awesome. We enter right here at the horizontal line, directly at the moment when I saw the pricing. But guess what? On 15 minutes, they had a whole different thing going on, which was the opposite. You're gonna end up losing the trade. As a matter of fact, it's 1 minute left, and probably you would have entered at the beginning of the candlestick, which would have been right here. And guess what? You lost the trade, all right? And it's a big lose. It's not even like for a few pips, no. It's a big one. And the reason why is simply because of the 15-minute chart. That's the reason why it's so important to be on the same page when it comes to 15 and 5-minute charts. Keep that in mind, please. All right, so we covered already the 15 minutes and the 5-minute charts. Now, the 1-minute charts are also very important. And this is probably gonna be like an extra tool for you to not only pass from making a few bucks with the strategy, but to start making way more money because you're gonna be more accurate. And the 1-minute candlesticks will be the ones determining the entry point of the trade, which we're gonna cover in a little bit. But what is it that I mean with the 1-minute candlestick? Look, this is the 15-minute chart. It looks good. This is the previous example that I was looking at. Let me just go ahead and find one that seems a little bit more active. Let's imagine that this one is actually good because it's crossing the 15-minute chart, but it's actually gonna become good literally right now. As you can see, it's reaching the 50 RSI in 5 minutes, and in 15 just crossed. So let's just imagine that is a good entry. Once you actually have those criteria met with the 15 and the 5-minute candlesticks, what you need to actually make sure, let me see if my hat is good. What you need to make sure is that the 1-minute candlesticks is either overbought or oversold. Now, when it comes to the 5-minute charts, we're never gonna see the actual RSI going all the way to the 70 level. It's gonna start between the 50 and the 30, and if it goes above that, then it's an uptrend. But when it comes to 1-minute candlesticks, there are many things going on during those 5 minutes, during those 15 minutes specifically. So what you need to do is to actually make sure the trend on the 1-minute candlesticks doesn't matter. What matters is what's the level that is actually happening. For instance, this one right here is actually being overbought, which means that it's touching or is above the 70 level. Look, you got the criteria of the 5 minutes and you have the criteria of the 15 minutes. Everything is good. Looking good. Now you go into the 1-minute candlesticks and you determine what would be a good entry. What happens is that if you're gonna enter a put position and like you see right here, the RSI is not at the 70 level, this is exactly what could happen. We got 1, 2, 3, 4, and 5 candlesticks going above. It doesn't happen always like this, but it could happen. And so in order for you to avoid being on that trap, what you can do is just wait for the actual price to go above the 70 level or touch the 70 level. That is considered to be an overbought condition because the price is going like too high on 1-minute candlesticks. And the same thing for the opposite. If it would be a call position, you don't enter somewhere here. You enter once you actually see that the price reaches the 30 level. What this does is that it gives you a lot more chances to make money, okay? Is it guaranteed that you're gonna win the trades? Absolutely freaking no. Nothing's guaranteed, especially when it comes to day trading. But what it does is that it reduces the possibilities for you to lose money. This is an example of this trade right here. If we actually go into the 15-minute candlesticks, this is a big green candle, right? If we go into the 5-minute candlesticks, let's assume that this was a good trade. It's not because it's already crossing the 50. But even if it was not crossing the 50, it could be a big green candle, even though we were expecting a red candle to form. And the reason is because in 1-minute candlesticks, it keeps on jumping. You can reduce the risk on the trade by waiting for the price to get to that level. Now, what the problem is that sometimes this is not gonna happen. Sometimes the red candle is just gonna start forming and it's just gonna drop. And if you wait for the right moment, you might just miss the opportunity. This is why you need to check as well the 1-minute candlestick. So you check 15, 5, and 1 minute. Hopefully this is actually clear. If not, try to rewind the video. we're getting into the most the most difficult part of the strategy, but you've been here so far, so I'm assuming that you're taking notes and that you're learning something new. All right, listen up. Before I continue with the tutorial, I do want to give you a warm invitation. In case you didn't know, I trade every single day 100% live, sharing my screen. As a matter of fact, in about 50 minutes from now, I have a second session with the people inside of this website right here called BLW Binary Master App. BLW Binary Master App. Look, what it is basically a private Telegram group where I actually put a live streaming on and I trade 100% live with the members. Now, this is priceless, especially because I'm using this exact same strategy, and some of them are my strategies, but mostly is this strategy that I'm teaching you right now. But you get to see me trading 100% live, setting the support resistance levels, choosing the pairs, letting you know why is it that I'm entering, or letting you know why I'm avoiding certain pairs and either losing or making money like 100% live. Obviously, I make more money live than I lose, but you get the point. So if by any chance you want to trade live with me, you don't have to, all right? You can just use the free information and make money. But if in case you actually want to trade 100% live with me, this is the option. Go to blwbinarymaster.com and check out all the information that you see right there. And if you join, you'll be added within 24 hours. And I have two different sessions. One is 13:30 GMT and the other one at 22 GMT. Or in Central Standard Time, it will be 7:30 a.m. and 4 p.m. Central Standard Time. If that's suitable for you, hopefully I can see you there. Go ahead and go to blwbinarymaster.com. Now, we've covered like pretty much everything, but it's actually time to talk about the entry points. What's the best entry point? Because some of you would probably see like, hey, I know like the 5-minute candlestick is like at the right moment. Like for instance, this one right here, 50-minute chart is also good. Like, Chris, when should I enter? Tell me exactly where to enter. Well, I'm gonna give you an extra tip for the strategy that I currently use, and that is finding support and resistance levels. I don't even know if Pocket Option has this. I don't think it does. Super trend, I don't even know what that is. So no, there's no like super trend. But you can use two things in order to make money with this strategy. Number one is doing your own analysis on support and resistance. How do you know what's the support and resistance? Depending on what is it that you're trading, you can find different candlesticks levels. But if you actually jump into 15 minutes, it's not gonna be the same as 5 minutes. My biggest recommendation is find the support and resistance level on 5-minute charts, because that's the one that you're gonna be trading, right? So for instance, this right here could be taken as a good support level that was broken right here, and then it became a resistance point. But if we actually go into 5-minute candlesticks, this is what we're gonna see. It's too far away. So that's not what we're looking for. A resistance level is if it's gonna be a put position, and a support level if it's gonna be a call position. So let's use this one as an example. This looks like there are several levels actually right here, as you can see. But this one seems to be the one that is respected the most, at least kind of it. You could even use this higher support level that you see on this little candlestick, like an order block. It's not an exact science how to find the support and resistance, but you need to actually play with the numbers. Let's go ahead and try to find another example. This one right here, let's assume that in 50 minutes, because I know for sure it's not, in 15 minutes, well, yeah, it's kind of good in 15 minutes. So let's go ahead and see, and let's assume that we're gonna take this trade. You can get an horizontal line. I always make it a little bit thicker because it's easier for me. There you go. I'm gonna change the color so it doesn't get confused with the moving average. So what is it that we do? I'm gonna look for a support, a resistance level, and I would say is this one right here. Take a look. It was respected here. It was broken here, and it's kind of dancing, but it's been respected many times. So this could be a perfect like setup for the entry. Okay, like this can help you decide where is it that you're gonna enter. If you notice, there's like 1 minute left for this candlestick, so you could either enter at the highest point for this one or wait for the next one and enter for the next one. Okay, now that you actually have, let's say, a resistance level, then you're gonna go to 1 minute candlesticks. And in 1 minute candlesticks, you're gonna actually confirm that entry, because you're gonna actually see how many times it's been respecting this resistance level, and plus, you're gonna realize whether it's overbought or not. Okay, let's just go ahead and try to find another example so that this is actually a little bit more clear. This one looks good. Take a look. It's almost reaching the level. We're gonna go to 15. It looks good. So we are going to choose a resistance level, which I would say is this one right here. There you go. You see it? This is a good resistance level. Now we jump into 1 minute candlesticks and confirm that. It is right here. Now, it hasn't been broken, and it could be broken and then returned back to base because this resistance level is for 5 minutes, but it can give you like a reference as to where you can enter, okay? Don't enter below this level because you're below the resistance. The price can still jump and you can lose the trade. Same thing would actually apply if it would be a call position, but I don't have any call positions actually going on right now. Let's assume that this was a call position, all right? Let's just assume. I'm not saying it is. Let's just assume. Hopefully, I'm being clear enough. So I'm actually gonna select this support level. And as you can see right here, I would say this is the support level. Yeah, because it's been respected here, here, and here a couple more times. So assuming that's gonna be the support level, now we can jump into 1 minute candlesticks and say, hey, yeah, this is like the minimum area that I need to enter. I cannot enter above this because I'm risking too much. So once it actually touches or even breaks it, that's where you're safer, okay? So that's how you choose the entry point. But, and this is the first time I'm actually gonna mention this in a video, but I'm gonna give you an extra tool that not even people in the Master app knows at this point that can actually help you even be more accurate with this specific strategy. And that is adding a Keltner channel. You go in here and select Keltner channel. Do you remember that Keltner channel that we used to have a while ago that I even used a lot for strategies? Well, this Keltner channel can actually help you make even more like accurate decisions. Just change the multiplier for 2 and you could be good to go. What is it that this indicator actually does? This indicator actually tells you when the price is going too overbought and then it drops and so on. Is this gonna be for the 5 minute candlesticks? No. It's gonna be for the 1 minute candlesticks. So once you actually chose already the entry point on 5 minutes, you have the resistance level, you have the trend and everything. In 1 minute candlesticks, if you can't really find a support resistance level, let's assume that you couldn't find this because, I don't know, you don't have the experience, you add the Keltner channel with these settings. 2010 and multiplier is 2. Keep that in mind. Once it actually goes outside the level, it means that the price is very likely to retract. So you don't enter here because the price hasn't actually gone outside of the Keltner. You go in here. Let's look at other examples where I actually used the resistance level. Take a look right here. Do you enter? No, I'm not going to enter. Why? It's not outside of the Keltner channel, okay? It was here, and you can see that it was a winner, but right here it's not. So I'm not going to enter. You don't have to. You don't have to actually use the support and the Keltner. This is like a substitute, okay? Literally right here, I said it's risky if you actually go into the support level, but let's say that you didn't have a support level, then this is what you would have seen and you would have entered here. And guess what? Boom, you got a winner. So this is an extra confirmation just for 1 minute candlesticks. Now, let's go ahead and recap one more time. 50-minute charts and 5-minute charts have the same trending and the stochastic is in a good position. RSI reaches the 50 level, you go into 1 minute candlesticks and you add the Keltner channel, or you can add it in 5, it doesn't matter, but you add the Keltner channel, and when the price goes outside of the Keltner channel, it's a good time to enter. If it's gonna be a put position, obviously it has to be outside of like the upper level, and if it's gonna be a call position, obviously it has to be outside of the lower level. Like literally right now, this is just an example that I gave you, but you get the point. Once you have those steps completed, you're gonna have a good trade. Hopefully that is making sense to you all. Okay, so we've come very far in this way. And the last thing that I wanna teach you today is the expiration time. This is a very confusing topic for many people. So I'm gonna try to explain it the best possible way, try to go slow with it, but it's really not as complicated as you might think, but just make sure that you fully understand this, okay? Especially if you're part or you're gonna be part of the BLW Binary Master app, because I get this question all the time. Like I'm in my session and someone's like, hey, what's the expiration time? And I'm like, dude, you're new? Yeah, I'm new. So in order for you to avoid missing trades and stuff like that and pissing me off during my actual session, because I tend to snap, that I'm not gonna lie, then try to understand this expiration time and this explanation, okay? Boom. Now, we are trading with 5-minute candlesticks. Is that right? So 5-minute candlesticks. What is it that we look for in, let's say this trade, for instance? Because I can find another one for some reason, you know? All right, let's say this one right here. It was a good entry right here. You can see that there's a timer. I told you to enable the timer right here. Go ahead and make sure that you enable it, okay? Enable the timer, because that way you can see on the right side of the candlestick, what is the time that candlestick actually has left to expire. Then a new one is gonna form, it's gonna start a timer again in 5 minutes, 4:59, and so on. The expiration time has to be the same expiration time of the candlestick. Let me say that again. The expiration time has to be the same as the candlestick. How do we do that in Pocket Option? By the way, link is in the description of this video, because in some brokers, you don't have this feature. So if you want to use the same broker I'm using, I'm having the link in the description. Now, there's a little clock icon here. If you click it, it turns into like a little flag or something. If you click on the flag, it's actually gonna turn into this, which is a fixed expiration time. Could be 3 minutes, 5 seconds, 15 seconds, up to 4 hours. We don't use that one. We're gonna use the other one. So we click on the clock and we make sure it says time, and it's gonna say time UTC, your local time. It could be -2, +4, your local time. But once you actually show this, literally right now, and my local time is 15:24. So as you can see, my next expiration time is at 15:25. What is it that you need to do? Your expiration time has to be the one with the candlestick. This candlestick, it's literally going to expire in 25 seconds, which is gonna be 15:25. So if I enter the trade, it's going to expire at the same time of the candlestick. That's the best expiration time. Bottom line. Here's the deal. If your broker doesn't have this feature, you're gonna have to manage. I'm gonna tell you what options you have in a little bit, but you're gonna have to trade differently, at least with the expiration. So that's the reason why I recommend you to use Pocket. I mean, it's worldwide. It's Stress is the best broker in the world, so why not? But if by any chance you don't want to, make sure that your broker has this or something similar, okay? Now, what happens now? If you actually select the auto time offset, it will actually change the expiration time to the next 5-minute candlestick expiration. Literally right now, I didn't do anything and it changed to 15:30. If I have it in 1 minute, which is going to be what? Let me just put it in 0. 1:27, let's say. If it's 1:27 and I have it in 1 minute, once it almost closes the candlestick in 1 minute, it's gonna switch me to the next expiration time, which in this case would be what? 15:28. Since we are going to be trading with 5 minutes, we need to actually have this one activated, +5. I set it for the right time. Now, here's the downside of this feature, is that it changes for the next expiration time, like 5 seconds before the expiration of the candlestick. And in my case, sometimes I enter trades for the next 5-minute candlesticks and so on. That's my own analysis, but you get the point. This is how the expiration has to work. What's gonna be the next expiration time? 15:35. What's gonna be the next expiration time? 15:40. Next one, 15:45, and I can continue all day long. That's the correct expiration time. Chris, I don't wanna use Pocket Option. I don't like it, whatever. My broker doesn't have this feature. What do I do? It's actually quite simple. Do the math. Like calculate the same amount of time that you have in the candlestick left and enter that expiration. Let's say right here, I got 3 minutes to go. I will enter 3 minutes. So if your broker doesn't have the fixed expiration time, it's not gonna have the seconds either. So 3 minutes, that's all you can do. If you find the entry point when it's 4 minutes left for the candlestick, 4 minutes. 2 minutes, you enter for 2 minutes. If it's just 1 minute and the price actually gives you an entry, which means it was a put, but the candlestick is green, don't enter in the last minute. Why would you? Just enter if you have 2 minutes or more to go. That's it. There's no other options. Some people would actually trade with the same strategy with 3-minute expiration time. Does it work? Yeah, sometimes it works for them. But do I use it? No. Do I recommend it? No. It works? I don't know. Sometimes it does. Can it be better than this expiration time and better than my strategy? Maybe. Try it. If it works for you, be my guest. Be blessed with money. But in the end, I'm telling you what I do, okay? This is education. This is entertainment on my end, okay? Yep, this is how you set the expiration time. Hopefully, this makes a whole lot of sense to you with this specific strategy. All right, so that is it. That is it for this tutorial. Hopefully you enjoyed it. I'm exhausted, you know, it's almost like a 1 hour video or something like that. Hopefully you enjoyed it. And what I want to do right now is that I want to share with you some live trades that I actually have. I don't remember how much I made with these specific live trades that I'm going to share right now, but check them out. Check them out, enjoy them, and learn exactly my entries and everything. And hopefully this video helps you guys out. And I'm just going to continue playing out with my cats. And that's going to be it for today, people. Thank you for watching. Smash the like. I'll see you in the next one.